Hello there, I hope that you're doing well. Welcome to this new trades breakdown lecture. During this lecture I'll be discussing how I shorted Nasdaq 3 times in a row from the same point of interest. The point of interest which I utilized for these shorts was this RUCB right here. I had outlined throughout my reviews that this RUCB was the only range which was holding Nasdaq back from reaching the previous week's high right here. The reason being is because when you pay attention to the delivery which occurred on Thursday last week, what you can see is that the market expanded towards the downside heavily. Notice that if we apply in our minds a range Fibonacci 2 and we pay attention to the high to low which formed, this is in a deep premium. I do not need to apply the Fibonacci 2 in order for you to see this. You can clearly see that this is a deep premium array. Therefore, this CB is going to be very important moving forward when it comes to navigating the order flow. When you pay attention to the price around which this CB formed, you can see that also formed around 750. And if you understand the APRs, you know exactly why that's important. So what is important to note is that because it's NFP week, I do not anticipate that the market is just going to continue running towards the previous week's high when I see such bullish price action. I instead look at this delivery right here as all IPTA repricing higher into this array. But once this array gets met, I'm not thinking to myself, oh, we're going to continue looking for longs. No, I had outlined on the mentorship forum within the market updates around this time that this CB had to be monitored moving forward. Was the only array holding price back from reaching the previous week's high. Therefore, when Nasdaq repriced into that range and I begin to see the signs of reversal taking place, I immediately thought to myself, okay, who has been making money all throughout this run higher? Longs, buyers. So who are we likely going to draw towards when the market eventually begins to roll over? Towards those buyers, of course, towards engineered sell-side liquidity. Because when you ask any retail-minded trader to look at this chart, they would think to themselves, of course the market is bullish, it's going to continue running forever. They keep on chasing long, whilst in reality when the time is eventually right, the market will seek to spool towards that engineered sell-side liquidity. So the moment that this CB was reached, I was waiting for something. What was I waiting for? Time. 1:45 p.m. to 2:15 p.m. is a very important macro throughout the afternoon session. Therefore, what I was anticipating was that we would likely see the market expand towards the sell side liquidity pool engineered below the 1 cycle low. So when we pay attention to my recording right here, what you can see is that I went short on Nasdaq at 147. And the reason why I went short right here is due to the following. When you pay attention to this delivery, what's important to note is that when we opened up at 1 p.m., we saw the market go sideways for a bit. Eventually, it repriced into CE of that RECB, and we took out buy-side liquidity resting above these relative equal highs right here. When we pay attention to the time, what's important to note is that these relatively equal highs were the highs of the line cycle high. Therefore, I'm looking at this run up higher into that key array as manipulation. Therefore, I can anticipate distribution to take place afterwards. What is my eye immediately drawn towards? My eye is immediately drawn towards the previous cycle low, just the one cycle low. If you pay close attention, you can see that there are clean lows right here, which are too smooth to be left intact. Notice that we saw the market reprice towards the downside, and notice that we saw it get back below the previous cycle high, the one cycle high right here. So the market retrace into that, and we see the market utilize that level as resistance price. Notice that SMT got established right here between Nasdaq and ES, and we saw the market slam towards the downside. However, the time is not right yet. The meaning behind that statement is the following. What I would like you to understand is in order for you to enter when price is likely going to expand soon, what you must wait for is you must for time and price to align. So what that means is that we can be paying attention to the macro right here, which is kicking off, and we can be paying attention to SMT. The reason why this SMT is so important is because the moment that SMT gets established, we can be looking for price to expand lower significantly. So notice that I went short above the cycle open right here. And notice that I went short the moment that SMT got established during the macro of 145 to 215. Notice that we have a volume imbalance right here, which I went short of, and notice that I'm outlining the full trade right here, where I'm outlining everything which I'm looking for. Notice that price expanded lower and a retracement higher is taking place. Notice that the market is retracing deeper than I had initially outlined of this CB. And the reason why this is still allowed is because as long as this high right here remains intact, we're still in the sell program. Why? Because we have SMT present right here. So what you can see is that price is coming back to the cycle open multiple times, and the reason why it's coming back to that cycle open is because shorts are being filled in every single time that the market taps above that cycle open. What cycle open? 1 p.m. open right here. Eventually we see the market form a new SMT at that cycle open right here, 3-minute cycle SMT as detected by the SMT detector, and we see the market expand towards the downside. Now from this moment in time, what I would like you to understand is the following. What I would like you to understand is that every single time that a new SMT is being established and the market reprices into anticipated direction, the moment that it displaces lower, this SMT has to remain intact. So in my mind, I'm already thinking to myself, okay, if price manages to get back below this low as it did right here, there's absolutely no way that price should ever take out this high. So in my mind, I've already trailed my stop now to this high. And when you pay attention to this delivery, what you can very clearly see is the following. You can see that we had this very large upclose candle which repriced into CE of that RECB. And we saw the market then displace below that. This large upclose candle is a bearish order block. The moment that price displaces below that, there is a change in the state of delivery which is taking place. Notice that multiple arrays got displaced through. So when you pay attention, for example, to this BC on the left side of the curve, you can see that that's an inversion for value gap. So every single time that the market retraced into this range, that right there is the low risk sell. That right there is potential shorting opportunities. The moment that the market displaces lower, and we see it displace below the previous 30-minute cycle low, which is this low right here, the next retracement higher is the next shorting opportunity. That was the short I took. Why oh why is this the highest probability short? The reason why this is the highest probability short is because of the fact that market structure is signaling to you that we're in fact displacing lower. Why? Because this is our low risk sell, so the moment that price displaces lower once again, that will provide a new shorting opportunity. But next to that, time is aligned, meaning between 145 to 215, we can anticipate that price is going to expand towards our objective. And one thing which I find important to share with you is the following. I highly suggest you to pay attention to the 3-hour webinar, which I held with my best one-on-one student, Rich the Bull, in which we discussed the 3-candle model, because that is how I anticipated that 2 p.m. would likely expand lower. But that's just a little gem for you to investigate on your own. But what I would like you to understand is that every single retracement higher right here, back into that same range of that blue shaded box of that RECB, provided potential shorts. Meaning if you weren't short yet here, you could have potentially found a short right here. The moment that the market in fact displays lower below this low, my eye is immediately drawn to this BC on the left side of the curve. The reason being is because this BC must function as an inversion for value gap once displaced through. Notice that a CB formed right here, and again, if you were not short yet, this right here was the potential short. And at this moment in time, when I see price retrace into this CB so perfectly, and I see it rejected with IOFET, where I see institutional order flow entry drill taking place, from that moment in time, I know that big down close candles are coming. When? 2 p.m. Because when you pay attention to the time, you can see that's now 2 p.m. So notice that we're going to see price expand towards the downside heavily. The reason being is because we're seeing a launch cycle high purge and refer towards a launch cycle low taking place. This originated from that RECB, which we have been monitoring. Notice how quickly 2 p.m. distributed, and this is all a result of one thing. It's a result of the RE chart signaling that a swing high was in the making, and therefore you can anticipate that when that third candle opens, that we're likely going to see big distribution take place. Notice that price stopped right in advance of that launch cycle low, right here, and we saw a retracement taking place. Now, when this retracement occurs, you cannot be thinking to yourself, price is going to displace higher, this is the reversal or whatsoever. Why not? because the drawing quantity is yet to be met. So what you can see is that price retraced into that CB, which formed right here. This is where new shorts are being filled, and eventually the market delivers towards the objective of the launch cycle low, and once the launch cycle low got delivered, that was the trade done. I held on to runners, but eventually my runners got stopped out around break even, and the reason being is because 3 p.m. did not distribute towards the objective which I had outlined prior, and that's okay. And the reason being is because I partialed at a logical level. From a higher time frame perspective, we have been bullish. We have been looking for higher prices. So this was a trade which was against the higher time frame order flow. However, what's important to note is that when you understand the delivery profiles on a weekly basis, meaning you understand that's an NFP week, you do not anticipate that we're going to run towards that previous week's high right away. Instead, you anticipate that we're likely going to engineer more buys liquidity for a later moment in time. And therefore, shorting opportunities will provide themselves when we reach that higher time frame drawing liquidity of that RECB and the signs become present of a reversal taking place. So notice that price reached the launch cycle low, and that's the purge and revert done. Beautiful sell program, and was very happy to see that many of you also participated in this short. When we then pay attention to the next day, what I would like to see is that the market repriced higher into that same RECB, and we took out the previous day high. Notice that we formed a higher high as well relative to this high. But what was important to note for Wednesday was the fact that we had two high impact news drivers which were very important. First of all, 8:15 a.m. and secondly, 10 a.m. Because we are hanging around that RECB, every single time that price is in there, I'm anticipating distribution lower. I'm anticipating rejections until we significantly displace above it. So therefore, I was anticipating for the 8:15 new CM release was the following. I was anticipating that we would likely reprice towards sell-side liquidity, which was engineered throughout the whole run higher into that array. Why? Because who has been making money all day? Buyers. So do you see how I'm going back again and again to that same question? Who has been making money all this time? Because once you can clearly see who has been making money, you can anticipate that price is likely going to draw towards that engineered liquidity when the time is right. And you might be wondering, how do you know that the time is right? How do you know that price is likely going to reverse? SMT, guys. This high right here was the London high. Nasdaq took out the London high whilst ES didn't. So that should immediately signal to you, hey, that's a session SMT inside of a key array where we're anticipating that we're likely going to reject off until we displace above it. Previous day high has been taken out. We see SMT above this previous day high. There's only one logical thing for news to do, and that's to expand and distribute towards the downside. When we zoom into the lower time frames, let me just turn the audio off. When we zoom into the lower time frames, this is a very textbook short, and the reason being is because of the following. What you can see is that throughout this cycle open, we initially ran towards the downside and price consolidated right here. We then saw an expansion higher taking place, and we saw Nasdaq take out that London high. But again, keep in mind that ES did not take out that London high. Notice that we saw the signs of reversal taking place when price expanded higher, taking out this buy-side liquidity pool, saw this BC getting displaced through with the creation of a CB. So what you see is that we form BC, CB, inside of that higher time frame point of interest, above key buy-side liquidity pools with session SMT in advance of news. This is IPDA tipping its hand to you. It's IPDA signaling to you that news is going to get utilized to distribute lower. Now it's important to note that I had outlined to you multiple things, and those are the following. That array is going to function as resistance as long as we do not see significant displacement above that. That is how you frame it in your mind. Meaning every single time that price came into that CB, that RECB, that is where rejections are to be anticipated. So when the signs become present of those rejections taking place, think time, then that means that you can anticipate, okay, we're going to expand away from that CB again and again and again. So when it comes to the news release then, there were some questions about, oh, are you not scared of trading in advance of news? Are you not scared of what if news reprices against you, whatever? Look, I had outlined to you prior throughout environment selection lectures that when it comes to news releases, there are a few news releases which you need to be cautious of. These are CPI, NFP, FOMC. In advance of these news releases, we do not look to trade, and the reason being is because they're likely going to be utilized for manual intervention. However, any other regular high impact news driver besides that is just a regular red news event, red folder event, so to say. If the signs are present of manipulation taking place prior to the news event, I have taught you that the news is going to get utilized to distribute. Distribute towards what? Distribute towards engineered liquidity. So when you pay attention to this delivery right here, what you can very clearly see is that a lot of sell-side liquidity has been engineered below all of these lows right here. Here you can see me go short on Nasdaq, and what you can see is that I went short inside of that upclose candle and inside of that inversion for value gap. My stop is placed above the swing high, and the reason being is because I'm giving it a lot of room since we have that news release. Now notice that I'm outlining the inversion for value gap right here, and in about 30 seconds in chart time you can see that the news release will take place. You can see me type it out, news incoming. And at this moment in time, it's simply a matter of waiting, because the news is going to get utilized for distribution purposes. Notice that I have a less risk on this position than usual, and the reason being is because I am allowing for the fact that, okay, if price does in fact manipulate higher once more, then I only take a minor hit instead of the full risk which I usually use. Notice that price beautifully expanded towards the objective of those relative weak lows, and that is why I look the partial. Notice that I'm leaving runners for the midnight open, and the reason being is because on days where we anticipate consolidation, price is likely going to return towards that midnight opening a lot. Notice that the news beautifully was utilized to reprice towards the downside, and we saw the market retrace eventually. In this retracement higher, what's important to note is that this also provides shorting opportunities if you miss that initial leg lower. Why? Think about the following. Do you see on the left right here that we have a BC? This BC can be extended to the right. This BC is a true inversion value gap. For price to continue expanding towards the midnight open, what we must see is that we must see this BC function as resistance on price. But next to that, we must see the previous cycle low, which is down here, function as resistance on price. Do you see how price retraced into the previous cycle low and then began expanding towards the downside? This was also a valid shorting opportunity. Personally, I was already happy with the short I was in, so I did not look to enter more, because I knew that later in the day there would likely also be an opportunity with the next news release. Now at this moment in time, all that I'm doing is I'm waiting. I'm waiting for price to deliver towards my objective of the midnight open. If price would retrace deeply and it would get above the cycle open, that is when I would say, okay, you know what? I'm going to just cut the position for a minor win on these remaining runners. And the reason being is because think about it. Price could technically speaking retrace into this CB, retrace maybe into CE of that and still be bearish. Therefore, when it comes to such repricing lower, give it room. But what you can see is that the market is eventually going to just continue repricing towards that midnight open because it's in a rush to get somewhere. Now, the main takeaway which I want you to have from this trade is the following. Whenever you see the signs present of manipulation taking place in advance of a news release, the moment that the news release takes place, we can anticipate distribution to unfold. And that is where you can see that I enter and literally 2 minutes after, objective gets met. So news gets utilized for heavy repricing. News gets utilized as a tool, as a moment in time, so to say, that IPTA is going to do very quickly what's already programmed to do. IPTA was already programmed to reject this early CB to reprice towards engineered sell side. However, the news release is basically the window of time in which they're able to do this very quickly, in which they're able to just make it happen in a short period of time. And that right there shows you the importance of understanding the economic calendar. And that is, of course, where the economic calendar, which we have been creating, called Trader Street, comes into play, where you can anticipate the delivery profiles based upon the news releases. At this moment in time, it's simply a patience game and we're waiting for price to expand towards its final objective. This moment in time, I don't care anymore about the position. Why? Because I've already secured profit, I'm already up for the day, and now I'm simply waiting to see whether or not my final objective will be met or if I'm going to get taken out on these runners. Notice how every single time that it's repricing back into the previous cycle low, into that BC as well, it's showing signs of rejections. That is signaling to me that that next expansion leg lower is likely going to take place soon. Why? Because if price would displace above this candle right here and would begin to utilize it as support, that would signal to me that we're likely purging this low to revert higher. However, because it's continuously functioning as resistance on price, every single time that price retraces right here, more shorts are being filled. And that is giving me confidence as well as that my final objective is likely going to get met. So when it comes to anticipating low resistance, what you're paying attention to is you're paying attention to how price is reacting to the time cycles, their respective highs and lows. The fact that we displaced below the golden high right here in advance of the news is IPDA signaling to you that we're likely going to turn around soon. The fact that we had SMT right here between Nasdaq and ES relative to that previous session high is confirming that as well to you. Here you can see that price stops right in advance of the objective, and that's the engineering of sell-side liquidity which is taking place on a very small scale on the second time frame. Eventually that sell-side liquidity gets taken out and the objective gets met. Beautiful run lower, and it was a phenomenal trade within a very short period of time. Notice that this occurred throughout the macro of 7:45 to 8:15. What you can see is that later throughout the New York morning session, I went short again. And the reason being is due to the following. Remember how I had outlined to you that at 10 o'clock we would have another high impact news release? When it comes to 10 o'clock high impact news, what I have taught to you is that when 9:30 manipulates, we can anticipate 10 o'clock distribution. Notice that we saw 9:30 open up, run up higher, trading just above the hourly CB right here. Notice how we spent some time above there. But keep in mind that we are still not closing, meaning between 9 to 10 a.m., the hourly candle of 9 a.m. is of course taking place. As long as this close is inside of this hourly CB, I'm looking at this as the establishment of a wick outside of the range to monitor. That is what I refer to as price distortion. What's that? Price distortion? New term. Yep. Look, whenever I provide to you a very key range to monitor, so to say, a key array, it's important to note that I'm paying attention to openings and closes around that range. The wicks can go outside of it relative to the time frame of the range which I provide. The bodies tell you the story, meaning the opening and the close price are the most important. I anticipate that this run higher above the range is a distortion in price, where manipulation is taking place above the range where IPDA should in fact form a swing high in, but instead we just manipulate above it, show the signs of reversal taking place, and then I anticipate that we're likely going to eventually close inside of this blue box again. Yep. Just like you have a distortion in time where IPDA is not doing anything, it's simply holding price within a specific range, so that smart money can fulfill their orders. It's waiting for the right time for the next expansion to occur. We also have price distortion. And what price distortion means is simply manipulation above or below a key range to monitor. How you can confirm price distortion is by paying attention to opening and closing prices. But when it comes to anticipating price distortion to take place, it's important to note that this is going to come with experience. In my mind, I'm looking at this as a perfect reversal fractal, which I'm going to walk you through. Notice that after price reached at midnight open, we saw a reversal taking place and the market expanded towards the upside. Do you see how slow this run up higher was? Do you see how much back and forth going there was right here? That to me signals that retail is looking at this as a strong support area, as a strong uptrend, so to say. That's how they're interpreting it. They are drawing trend lines like this from this low all the way directly towards the upside, and they're thinking that price is just an uptrend and going to continue running up forever. But what's important to note here is the following. What I would like you to understand is that this is in fact the engineering of sell-side liquidity which is taking place around that midnight open. Because we have news at 10 o'clock, my eye is drawn to 9:30. 9:30 manipulates higher and we see price trade above the blue shaded box, but notice that when the market retraced into that box, we also retraced into a BC right here. We saw a warmer push higher taking place, taking out buys that created resting above this high, and we then saw the market slam towards the downside. Do you see this displacement leg right here? Do you see how we create this CB right here through this row, which formed inside of this BC? This is my market structure shift pattern. What I waited for was the following. I waited for price to retrace into this bearish breaker, this downward candle, into a premium of this large CB, and from there on I went short. My stop is placed above the swing high, and the reason being is because price could retrace into this long wick right here. The reason why this long wick could be traded into is because this could be a bearish rejection block. Why is this a bearish rejection block? Well, if you pay attention to the reversal sequence as I've taught it to you within the 2025 model series, it's important to note that there's a certain sequence in which every single reversal takes place based upon PD arrays. Therefore, the moment that price retraces into this bearish breaker, it could already expand lower from there. However, you must allow for the market to reprice into this long wick as well, since it is a bearish rejection block. Notice that the market repriced into exactly the open of this down close candle, into the low of that rejection block, and notice how the market just steps it right here. What I now want to see is I want to see the market reject it and expand towards the downside. Notice that I'm outlining a specific alt inefficiency right here. And the reason why this alt inefficiency is important is due to the fact that we have cells that create engineered above that inefficiency. Clear lows right here, clear lows right here. It's now 9:51 or such, and therefore I'm anticipating that price is likely going to expand lower ahead of the news, but that the news at 10 o'clock is likely going to be the distribution. It's likely going to be the moment in time that price is in fact going to run aggressively. Notice that I'm outlining sell side liquidity resting below that 9:30 low right here. And the reason being is because a lot of traders are looking at charts purely from the 9:30 open, since their trading platforms only allow 40 regular trading hours. Therefore, what's important to note is that this is a very important low. Always pay attention to sell side liquidity resting below the 9:30 to 10 o'clock low. Notice that price retraced into this inefficiency, and that's again a potential short. Why? Because look at it from this perspective. Low risk sell. Next displacement leg lower, retracement higher. This is your next phase of distribution. At what time is this occurring? Throughout the macro from 9:45 to 10:15. At this moment in time, I'm already confident in the fact that we're going to close inside the price range of that RECB, inside the price range of that blue shaded box. So that confirms to me that this movement above the box was manipulation, and therefore 10 o'clock will have to distribute lower. Isn't it interesting to see the similarities between the repricing lower, which occurred at 8:15 AM, and the repricing lower, which is about to take place at 10 AM? Do you see how the same signatures were in play, where you see SMTB established right there on the highs at a point of interest, followed by the reversal sequence in terms of PD arrays and such? Beautiful, isn't it? Notice that price is having a hard time with displacing below the lower end of that CB. Notice that the wicks went below it, but notice that the bodies keep on closing inside of it. That's a beautiful sign to me, and the reason being is because it shows that IBDA is referring to the array and the range monitor which I had provided to you. So whenever I provide these very specific arrays or ranges and such, please have them on your chart and investigate how price is reacting to them. What you can see is that price traded into the CB once more, and now 10 o'clock news is going to take place. Notice that the 10 o'clock news was utilized to reprice into the objective of that BC, and it was a beautiful distribution once again. With that being said, I would like you to investigate the delivery profiles when it comes to news releases. Pay attention to what happens in advance of news releases to confirm that news is likely going to distribute. If there's no manipulation in advance of the news, anticipate that the news is going to manipulate so that distribution will take place afterwards. If you investigate those guidelines, I'm sure that you're going to have a lot of clarity when it comes to navigating Newsdays. I want to thank you for watching this trades breakdown lecture all the way to the end. I hope that you enjoyed this format in which I went over my execution video and walked you through the thought process, and I look forward to speaking to you soon again throughout a new lecture. Be safe.